Obtaining an employer identification number, EIN, from the IRS. Once you've settled on a business structure, the next step is to get your employer identification number, or EIN, from the IRS. Think of the EIN as your business's social security number. It's a unique identifier that the IRS uses for tax purposes. The good news is that applying for an EIN is free and straightforward. You can do it online through the IRS website. Having an EIN is essential for several reasons. First, it's typically required when opening a business bank account, which we'll talk about next. It also allows you to hire employees if that's in your plan, and is necessary for filing business tax returns. Even if you don't have employees, having an EIN helps separate your personal and business finances, reinforcing that important legal distinction we discussed earlier. Moreover, an EIN adds a layer of legitimacy to your business in the eyes of vendors, suppliers, and potential lenders. It's a small but significant step in building your business's identity and credibility. So, set aside some time to apply for your EIN. It's a quick process that brings long-term benefits. Choosing the right business structure to legitimize your company. Let's kick things off by talking about the foundation of your business. Its structure. The business structure you choose isn't just a legal formality, it's a crucial decision that impacts your daily operations, taxes, and even your personal liability. Common structures include sole proprietorships, partnerships, limited liability companies, LLCs, and corporations. Imagine you're starting out solo and considering a sole proprietorship because it's straightforward and easy to set up. While that's true, it's important to know that in a sole proprietorship, there's no legal distinction between you and your business. This means your personal assets could be at risk if your business incurs debt or faces legal action. On the flip side, forming an LLC or a corporation creates a separate legal entity for your business. This separation provides a layer of protection for your personal assets. Think of it as a safety net. Additionally, lenders and credit bureaus often view LLCs and corporations as more credible, which can be beneficial when you're establishing business credit. Selecting the right structure can also influence how you're taxed and how much paperwork you'll need to handle. For instance, corporations might face double taxation on profits, while LLCs offer more flexibility in how they're taxed. It's worth taking the time to research each option or consulting a legal professional to find the best fit for your business goals and needs. Opening a business bank account. Now that you have your EIN, your business registered with your state, county, and city, you're ready to open a business bank account. This is a critical move in separating your personal finances from your business activities. Having a dedicated business account helps you keep track of income and expenses more efficiently, which is a big help come tax time. When choosing a bank, consider factors like fees, account features, and the bank's experience with small businesses. Some banks offer special perks for business accounts, such as lower transaction fees or access to business credit cards. Building a relationship with your bank can be advantageous down the road when you might need financing or other services. Opening a business bank account typically requires your EIN, business formation documents, and identification. Make sure to keep all your business earnings and expenditures flowing through this account. Not only does this make your bookkeeping cleaner, but it also provides a clear financial history that can be beneficial when applying for credit. Next up is establishing a professional image with a dedicated business address and phone number. Even if you're operating from home, having a separate business address, like a P.O. box or a virtual office address, adds a level of professionalism. This can be important when dealing with clients, vendors, and credit bureaus. Similarly, setting up a business phone number ensures that business calls are kept separate from personal ones. Services like virtual phone systems can provide you with a business number that routes calls to your cell phone, offering flexibility while maintaining professionalism. These steps might seem small, but they contribute to the overall credibility of your business. Lenders and credit agencies often look at these details when assessing your company's legitimacy. Plus, keeping your personal contact information separate can help protect your privacy. Getting a DUNS number from Dun & Bradstreet. Now let's talk about the DUNS number from Dun & Bradstreet. This is a unique 9-digit identifier for businesses, and it's a key component in building your business credit profile. You can apply for a DUNS number for free on the Dun & Bradstreet website. Having a DUNS number allows your business to be listed in Dun & Bradstreet's database, which is accessed by lenders, suppliers, and potential partners to check your business's creditworthiness. It's like being added to an exclusive directory where you can start establishing your business credit history separate from your personal credit. Once you have your DUNS number, ensure that your business information is accurate and up to date in their system. This will help avoid any confusion and ensure that your credit building efforts are correctly attributed to your business. Opening accounts with vendors and suppliers that report to credit bureaus. One effective way to build business credit is by opening accounts with vendors and suppliers who report payment histories to business credit bureaus. These are often called trade lines. When you make purchases on credit terms, like net 30 or net 60 payment terms, and pay on time, it positively impacts your business credit score. Start by identifying suppliers that report to bureaus like Dun & Bradstreet, Experian Business, or Equifax Small Business. Companies like Uline, Quill, and Granger are popular choices that offer office supplies, equipment, and other necessities. By purchasing items you already need for your business and paying the invoices promptly, you're building credit without incurring unnecessary expenses. Remember to only take on what you can afford. The goal is to establish a history of timely payments, so it's crucial to manage these accounts responsibly. Over time, these positive reports can significantly enhance your business credit profile, making it easier to secure financing when you need it. Using business credit cards and loans responsibly. Another powerful tool in building business credit is using business credit cards and loans wisely. Start by applying for a business credit card that reports to the major business credit bureaus. Use the card for regular business expenses and make sure to pay off the balance in full each month. This not only helps build credit, but can also provide rewards or cashback that benefit your business. When considering loans, even small ones, ensure that the lender reports to business credit agencies. Taking out a loan and repaying it on time demonstrates to lenders that you're a reliable borrower. However, be cautious not to overextend yourself financially. Only borrow what you need and have a clear plan for repayment. Using credit responsibly is all about balance. Maintain low credit utilization. Aim to use less than 30% of your available credit. This shows that you can manage credit effectively without relying too heavily on it, which is a positive signal to lenders. The importance of paying all your bills on time. This might seem obvious, but it's worth emphasizing. Paying all your bills on time is crucial for building and maintaining good business credit. Payment history is one of the most significant factors in your credit score. Late or missed payments can have a negative impact that lingers for years. Set up reminders or automatic payments to ensure you never miss a due date. This includes payments to vendors, credit cards, loans, and even utility bills if they're reported to credit bureaus. Consistent, on-time payments build a solid credit history and demonstrate reliability to potential lenders and partners. Think of it this way. Every payment you make on time is an investment in your business's reputation and financial future. It's a simple habit with powerful results. Monitoring your business credit reports regularly. Finally, keeping an eye on your business credit reports is an essential practice. Regular monitoring allows you to track your progress, catch any errors, and address potential issues promptly. You can obtain your business credit reports from agencies like Dun & Bradstreet, Experian Business, and Equifax Small Business. Review your reports carefully to ensure all information is accurate. Look out for discrepancies in your business name, address, or payment history. If you spot any errors, contact the credit bureau to dispute them. Correcting mistakes can improve your credit score and prevent misunderstandings with lenders. Monitoring your credit also helps you stay prepared. You'll be aware of how lenders view your business, which is valuable information when seeking financing or negotiating terms with suppliers. It's a proactive step that keeps you informed and in control. In conclusion, establishing business credit is a journey that requires diligence and smart financial practices. By choosing the right business structure, obtaining necessary identification numbers, and separating your personal and business finances, you're laying a strong foundation. Building relationships with vendors and using credit responsibly further enhances your credit profile. Remember, consistency is key. Paying bills on time and monitoring your credit reports ensures that your efforts translate into a solid credit history. This opens up opportunities for financing, better terms with suppliers, and ultimately contributes to the growth and success of your business. With these strategies and a bit of patience, you're well on your way to building robust business credit. It's an investment in your company's future that can pay dividends in the years to come.